Good morning and welcome to the Hummingbird Resources PLC investor presentation. Throughout this recorded presentation, investors are being listen-only mode. Questions are encouraged. It could be submitted anytime via the Q&A tab situated in the right-hand corner of your screen. Just click Q&A, type your question and press send. The company may not be in a position to answer every question received during the meeting itself. However, the company will review all questions submitted today and will publish responses where it's appropriate to do so. Before we begin, I'd like to submit the following poll. And just before we hand over to start the presentation, I'd like just to run a short video for you all.
Hummingbird Resources is a multi-asset, multi-jurisdiction gold company. The company has a material gold resources and reserves-based profile across three key assets in West Africa, in Mali, Guinea, and Liberia. In Mali, our producing asset called Yanfolila is in its fifth year of gold production, having started production in late 2017. It is an asset that has paid off over $100 million in debt and associated costs to fund its development in less than 4 years, to provide future cash flows to help fund the company's overall growth platforms. An asset with multiple open pit deposits and underground mining potential to provide a long life mining operation for years to come. In Guinea, we have started construction for our second producing gold mine called Kouroussa, scheduled for first gold pour by the end of Q2 2023. An asset with world-class gold anomalies in the prolific Siguri gold region has material life of mine upside with further exploration. Once in production, is forecast to be a low-cost producer of sub $1,000 an ounce, and in the first 3 years is forecast to produce on average over 120,000 ounces of gold per annum, which will more than double the company's overall production profile. In Liberia, where the company began, a development asset called Dugbe, with our earning partners Pasofino Gold Limited, is rapidly moving towards finalising a definitive feasibility study scheduled for completion in Q2 2022. Dugbe has over 4 million ounces in resources, and studies show a 14-year plus mine life, sub $900 an ounce cost profile with over 2,500 square kilometres of exploration potential. In relation to environmental, social and governance programs, or ESG, the company is a member of the World Gold Council since June 2020 and has signed up to adhere to the internationally recognised responsible gold mining principles. Hummingbird has extensive ESG programs across all three assets, from clinical care solutions on site in our communities, sustainable community development and employment programs such as garden markets and poultry farms, and an annual tree regeneration program which we are looking to roll out in all three assets. Further, the company is a founding member of Single Mine Origin, or SMO, a leading platform for fully traceable precious metal from responsibly operated mines.
I'd now like to hand you over to Dan Betts, CEO of Hummingbird Resources. Good morning, Dan.
Morning, Paul. Thanks very much. Thanks everyone for taking the time to dial in this morning. I would just like to introduce the team here. We've got Ed Montgomery, who's Head of Business Development and ESG at Hummingbird. We've got Tom Hill, Finance Director, sitting beside me here in the office. And at site, we've got Anthony Coken, who's the Chief Operating Officer. We've had a couple of issues with connectivity with site this morning. So if Anthony drops off, then he can dial in and still be available to answer questions. So what I'd like to do is run you through the presentation at risk of repeating some of the stuff in the video you've just seen. But if I go through the corporate presentation, then we're going to open up to questions and look forward to those afterwards, which I'll direct accordingly. So if we can go through the presentation, if you go to slide 3, please, Monty. Right, to give an overview of Hummingbird, we are a multi-mine, multi-jurisdiction company. That is what we are aiming to become in short order. We currently have one producing mine called Yanfolila in Mali, and we're building our second mine, Kouroussa, in Guinea. We have a third asset called Dewatering in Liberia, which has a substantial gold resource and is coming towards the end of a DFS study program where we will have additional optionality around the development of that asset. Hummingbird has a 7.1 million ounce resource base. It's a very significant mineral endowment, and how we monetize that and create value from that resource base is what exercises all of our time. We have updated our company reserves this year to 1.12 million ounces at an average grade of 3.03 grams a ton. Now that reserve is across 2 mines. And obviously, as we go through the presentation, I can spell out where the different grade and portions of those reserves are. But importantly, that reserve does not include the significant drill program that was conducted last year. I think 68,000 meters of drilling was conducted across the Kouroussa and Yamfilila sites. And those results that have largely been announced to the market will be incorporated in a resource and reserve update by the end of Q2 this year. The production for the company was 87,000 ounces of gold in 2021, and guidance for 2022 is 87 to 97,000 ounces at an AISC of $1,300 to $1,450 an ounce. I think importantly, the message we want to get across here is, as well as discussing in detail the operations at Yamfilila, we also want to get across the organic, funded, significant growth pipeline that Hummingbird has. By the middle of next year, we will be having a gold run rate of between 220 and 250,000 ounces of gold, which is obviously more than double the current run rate and a significant growth profile. We are financed for that growth. We have a strong relationship with Coris Bank, with whom we financed Yamfilila and the development of the second ball mill at Yamfilila, and we have a group $100 million facility with Coris in place. There's obviously significant mineral exploration upside across all 3 sites, and that's a core part of our growth strategy as well. Next slide, please, Monty. So this slide is a table of the resources and reserves across the different projects. Importantly, as I've already said, by the end of Q2, there will be a resource and reserve update for the company, and the Dubi DFS will also be released in the first half of this year, which we anticipate showing maiden reserves, of course. So we're anticipating significant growth to the reserve profile of the group. Our aim, as we said, is to become a multi-asset producing company, to diversify risk, but also to provide more cash flow for the company. At a run rate of 210 to 250,000 ounces a year, depending on the profile in any given year, we are looking to stabilize and reduce the company's AISC to below $1,100 an ounce across the group. We can talk about that a bit more detail in some of the questions. Obviously, the world is going through an inflationary cycle, and there are some pressures there, but there are also savings, and I think we're in a healthy place in that ambition. To talk a little bit on slide 6 about achievements and catalysts and announcements going forward. 2021 was actually an extremely busy year. I think the operational performance at Yamfilila has taken all the headlines, and we will obviously talk more about that. But I'd like to draw some attention to some of the achievements that were done in the company during the year. At Kouroussa, we were awarded a mining license to the company. That is no small feat. We completed the environmental impact assessment study. We financed the project for Kouroussa, and we have started construction at site. Currently, there's over 300 people mobilized at Kouroussa. All key contracts are either in negotiation or at the tender process. We conducted a 24,000 meter infill drill program. Some of those results have been released to the market. Others are still due. There have been some absolutely stunning intersections and drill results there, and we are extremely excited about the exploration potential and upside to the Kouroussa mine. Perhaps most importantly, we produced maiden reserves at Kouroussa, but this was only on one pit, and again we will look to provide an upgrade to those reserves by the end of Q2 this year. At Yamfilila, we updated the mineral resource estimate to 1.92 million ounces of gold, more than we had, I believe, or similar to when we started the project 5 years ago. We updated the reserves to 706,000 ounces of gold. These also included maiden reserves at the Kamana East underground project, which we are looking to bring out detailed study analysis shortly and examine how we can incorporate that into our mine plans going forward. In Liberia, we have a joint venture partner called Pasofino, who has spent in excess of $25 million developing that project through feasibility study. And that feasibility study is due by the end of H2 this year. The economics delivered in the PEA that was released in 2021 show a robust, substantial project. The resource has been completely redone. it's been upgraded and the grade has increased. So we are very excited about the optionality there at Dewby, and obviously the expenditure of cash has not cost Hummingbird shareholders anything in terms of our internal liquidity and resources. Slide 7, Monty, is it's a slide on our core values, and it's something that people talk about a lot. But at Hummingbird, we are trying to build a company that really focuses on good stewardship in the mining industry. We believe that it's possible for the mining industry to leave a positive legacy in the places where it mined, and we are looking to transform as best we can the reputation of the mining industry in a positive way, both environmentally and in the community where we operate. And it's for that reason that we have been, if you go to the next slide, it's for that reason that we've been founding members of an initiative called Single Mine Origin Gold that adheres to all the best practices in global mining, the RGMPs for the World Gold Council, and it provides a fully traceable source of gold to responsible mines. And we're looking to roll this initiative out across the retail industry to showcase the good work the mining industry does. We can talk more about our environmental programs later, but they're substantial, they're core to our business, they run across all 3 of our sites, and it's an area of the business that we are keen to focus on more and more. To go into the assets in a little bit more detail, well, first of all, if you go to slide 11, Monty, the region, West Africa. We started in West Africa in Liberia, and it's logical that organic growth has happened in this area. You've got your network, you've got your relationships, you see more assets, and the region it's one of the most significant gold development regions in the world. In terms of exploration success, more gold has been found in West Africa than any other part of the world. In terms of production, I think it's the 2nd largest region after China. And in terms of exploration spend, it's well known to the markets, with nearly $500 million spent in 2020 on exploration. So I think from a point of view of mineral endowment, it's the right place to be. In terms of options to find opportunities to grow a gold company, it's a great place to be. In terms of risk, political risk, logistical risk, security, there are challenges, and that's been an area we've put a lot of focus on over the last few years. And being that we know the area now, we've operated there well over a decade, we're very comfortable in the environment. So to go to slide 12, Monty, what we want to do here is highlight some of the numbers around the Kouroussa gold mine that we're building at the moment. We have a resource base of just over 1 million ounces, 1.18 million ounces at 3.08 grams a ton. But we have a maiden reserve of 409,000 ounces at 3.68 grams a ton. This will be updated in Q2, as I've previously said. The mine's fully financed. We have a $100 million loan facility from Coris Bank, and the economics are extremely robust, with almost an 80% IRR at the current gold price and an NPV of getting on towards $250 million. There'll be nearly $350 million of free cash flow generated from the Kouroussa mine, and a payback of the debt borrowed in under 2 years. The focus of the company is to increase the mine life to show more equity value in the project, but the project team is obviously singularly focused on developing the project on time and on budget as we speak. If we can move on, Monty, to slide 14. This slide 14 shows a timeline for the project. We have started construction, and during the year there'll be regular updates as key contracts and milestones are met at the project. We are targeting first gold pour by the end of Q2 next year. And as we've previously highlighted, that will more than double the company's production profile and aid significantly in reducing the group's AISC profile. The picture on slide 15 is to try to give a sort of visual impression of the landscape and the development at site at the moment, and where key parts of infrastructure are being positioned in the project. At Yamfilila, we have a current resource base of 1.93 million ounces at 2.32 grams a ton. There is a reserve of 706,000 ounces at 2.57. 504,000 of these ounces are in the open pit, and the grade there is 2.3 grams a tonne. And we've had maiden reserves in our Commander East underground project of 202,000 ounces at 3.64 grams a tonne. The company is focused on extending the mine life beyond these reserves, and the drill program from 2021 will be incorporated in the resource and reserve update in Q2 this year. At the moment, the Commander East underground project is coming to an end in terms of the feasibility studies and the economics, and we will look to announce those results in reasonably short order. And as a company, we are looking at how to incorporate those in our mine plans and bring forward higher grade ore from the underground. Mali, as a country, I mean, the region has obviously made news for the wrong reasons recently with military coups in Burkina Faso, Mali, and Guinea. But Mali it's a mining country. It has a well-established mining code. It has significant large mining operators throughout the country, and there's been no interruption to the mining industry through any of this activity. The forecast for 2022 at Yamfilila is 87 to 97,000 ounces at an AISC guidance of $1,300 to $1,450 an ounce. We have, over the last 4 months, mobilized significant new mining fleet to site. 5 excavators have been mobilized, 2 are already operational. The rest are either being assembled or en route to site. The reason for this is to augment the fleet that our contract miner has that has been underperforming in terms of utilization and availability. And I'm sure we can cover that in the questions later, but the underperformance of that mining fleet has been a significant reason for the underperformance of the mine. If you're not able to mine the volumes, you can't access the ore, and then you're blending ore with lower grade stockpiles, and ultimately you're producing less gold. The biggest driver for AISC is ounces produced, and if they drop significantly, the AISC goes up significantly. I think, Hummingbird is very honest about issues it has, and it's addressed them quickly and aggressively. It's a challenging environment in which to address issues such as bringing plant to site. You've got COVID outbreaks. We've had up to 300 people with COVID at any one time at site, and you've obviously got challenges at borders with customs, sanctions, and border controls. All of these have been challenges that the team has overcome, and I think I'm very proud of the way they've handled themselves in these challenges. The focus for 2022 is obviously, though, to get to steady, predictable operations at Yamfilila and to provide a predictable, trustworthy outlook going forward from 2023 and beyond. I think Yamfilila has, in a short time, paid off all the debt and capital invested in it to build the mine. The reserves and the resource base are there to support a longer mine life, and we're looking to extend that. And I think there's huge optionality there to use Yamfilila as a platform to grow a gold company. We just need to steady the production profile to generate the internal cash flows that we want. So to go on a little bit more to slide 18, Monty. Slide 18, Anthony can talk to in some of the questions, but these are some of the initiatives he has been conducting since he's joined the company, wide-ranging through the whole business, from technical issues around blasting and reconciliations to obviously security initiatives, contract management reviews, and improving our geological controls at the pit face. I think that's probably enough on Yamfilila until we get to questions. Our third asset, Liberia, is where the company started. In Dubai, we have a joint venture partner called Pasofino Gold listed on the TSX in Canada. They have spent in excess of $25 million to date, taking the project towards DFS, which they will aim to complete in the next first half of this year. The PEA announced in 2021 had extremely compelling economics. The resource has been redone and increasing confidence in that resource base. And I think there is tremendous opportunity here for Hummingbird shareholders to create value from an asset that has been forgotten in our portfolio. There's a mine to be built at Dubai. Exactly how we build that mine is subject to strategy and discussion. There are lots of ways we can look at developing the asset. But what is important is it has a non-negative value, right? I mean, there's a huge gold asset with real upside that will be a mine, and at the moment that's lying unvalued in our share price. So, I'm conscious of time, and that the purpose of this is to sort of open the floor and have lots of questions and engage. So I think this presentation is online. There's some more detail in the appendix, and I think probably I'm going to leave it there and wrap up and hand back to you, Paul.
Fantastic, Dan. Thank you very much indeed for the presentation. Ladies and gentlemen, do please continue to submit your questions using the Q&A tab situated in the right-hand corner of your screen. Just while the team take a few moments to review those investor questions submitted already, I'd like to remind you that recording the presentation, along with a copy of the slides and the published Q&A, can be accessed via your investor dashboard. Edward, I know I haven't given you a huge amount of time, but obviously we received a number of pre-submitted questions and some questions throughout the event today. If I may just hand back to you to address those questions where appropriate to do so, please.
Yeah, thanks, Paul, and thanks for all the questions that are coming through online that were pre-submitted. There's been quite a few, so we'll endeavour to get through as many as we can, particularly with Anthony there on site to run through. So just bear with me, I'll collate those, and I'll start off, and then I'll direct to the person who's best to answer them. There's a fair few on Yangtze, obviously. I think we'll focus on that area first. One of the questions is, can you clarify the issue with production, given more ore was mined in Q4 than the previous quarters, and how have the contractors failed to deliver, and who manages it on a day-to-day basis? Again, Anthony, obviously, over to you on that one, if you could unmute, or Paul unmuting.
Yeah, thanks for that, Monty. Look, I think just on the first question that you posed, why is there additional ore production? So the Q4 ore mined is higher than the processed volumes because we mined additional marginal material. This marginal material is stockpiled, and it's intended to be fed at the end of the life of the mine. Also, you may have seen that the processing was higher in the quarter, in the Q4, as compared to the previous 3 quarters. This is largely due to a number of factors: slightly improved run times, some additional oxide feed, and some of the optimization initiatives are starting to take hold. I'll continue on. You also talked about the underperformance of the mining fleet. Really, since September, the primary mining fleet, the excavators, have seen issues with availability in the meantime between failure. To mitigate that, we have been on a program to secure additional fleet. Now, the daily management of the contractor miner is done. We have a contract mine manager who sits on site here, and the performance of the contractor is through the SMK mine manager.
Thanks, Anthony. Next question is, what is the company doing to rectify these operational issues at Yangtze that have impacted the production over the last 2 quarters in particular, including what is happening in terms of grade control, and can we expect better grade overall versus what we're seeing in Q4? To you, Anthony.
Yeah, look, thanks for the 2 questions, Monty. Look, as stated, the excavator is the primary driver here. So since September, we've been diligently working on some options. We've signed contracts for 5 excavators, 3 of which are on site, and of which 2 are operational. The 3rd that is on site will be operational in the next 14 days, and the remaining 2 excavators that are coming in will be operational late February and early March. These machines are fully maintained, and they come with a full maintenance package around them. But we've also reinforced the maintenance team on the ground. We've been working with the contractor, and we have an additional mobile maintenance capability already on site. Some of those resources, i.e. personnel, are here, and others are en route. In terms of the grade control is conducted on a grid which is geostatistically determined, but generally it's on a 10 by 5 metre spacing, and the sampling is every metre, and the determination of that information goes through OC or ordinary kriging. The grade performance looking ahead for 2022 is in the range of between 2 and 3 grams per tonne.
Thanks, Anthony. Next question, I think, from you, Tom, is who's paying for these mitigation measures in terms of the excavators, and how are we funding the additional excavators?
As these mitigation measures are the responsibility of the contract miner, the contract miner is bearing the costs of these.
Okay, and what are you expecting? Why are you expecting reduced production in 2022, given increased excavator capacity and improved level of maintenance, versus the forecast originally set in 2021?
Yeah, there's going to be a build-up period with these excavators coming online. So as you can see, that they're moving into the operation in Q1, and then they'll build up into Q2. So it's in line with the production performance of the excavators and the production profiles, and increasingly we're looking for stability and a constant performance.
Okay, and what is the expected impact of the increase in COVID-19 cases on site? Or maybe just you can give a bit of colour also, Anthony, about COVID cases materially declining recently as well.
Yeah, with the Omicron variant, we did see a spike. However, as of yesterday, there's 7 cases, active cases that we're managing. In short, the impact is currently minimal. The company has clear protocols for managing COVID both on and off site. And we have a significant international recognised medical provider who gives us assistance on this front, and that has also limited any adverse effects and impacts that we might have seen.
One here on ECOWAS. Can you provide an update on ECOWAS sanctions and any impacts on operations? And what alternative arrangements have been made should the ECOWAS sanctions remain in place longer term, Anthony?
Okay. In short, the ECOWAS sanctions are currently not impacting the operations. There's a dedicated team reviewing all operational elements that could be impacted and are monitoring the situation. Long term, we're staying vigilant, and we will adjust any of those mitigations in line with any changes that we see either announced or that we anticipate coming down the line should they occur.
A couple of questions on the late Q4 disruptions at site Yankalila. Can you provide further detail on the local disruption, whether it was targeted at Hummingbird, and have there been any further security issues on site, and what security upgrades have been made to ensure that there's not a shutdown happens again? Anthony.
Thanks, Monty. So there have been no further disruptions on site since that issue. In terms of managing the interface with the community and the government, our engagement with the government and the community is very good, and we have an open dialogue with them. We've also upgraded our company security structure over the last 2 quarters, and this is supporting the operations on the ground. In terms of the targeting of these issues towards the company, it's a very small sector of a community element, and particularly those issues are being worked through, but they are not a primary issue, and they really have nothing to do with how we manage ourselves within the community.
Understood. And a question about sort of longer term profile of Yankalila costs and production levels. What are the longer term production and cost aims at Yankalila? I mean, given you've done a lot of work on the mine plans, Anthony, maybe one to you. We haven't published, just to be clear, we haven't published longer term guidance numbers outside the 2022 numbers, but you can give a bit of flavour about what you're thinking, what processes you are doing in particular to bring down the AISC number.
Yeah, look, in terms of the long term Yankalila, The production profile is circa 100,000 ounces, obviously with the lower AISC than we are currently, look more in line with our peers. And so we're expecting this in time. There are a number of work streams to initiate this and enable us to bring the improved production performance. The slide that Dan displayed earlier really is the strategy that we're working towards. So this is multi-element and multi-disciplined work streams that I'm actually currently on site auditing, managing, providing input and feedback, and making sure that they're on track and we're getting traction on the ground with them.
Understood. A bit on the guidance numbers. How confident are you in forward guidance for production and for AISC in 2022, or is this dependent on everything going right? Maybe Dan can quick overlay on that one.
Well, I mean, we've put a lot of work into building an internal budget that accommodates the risks that we can foresee. We've included dilution, run rate of the mill, downtime. I'm confident in the guidance. I mean, when you talk about AISC and production, they're obviously intimately linked. If you miss one, you probably miss two, right? I mean, I was confident in the guidance last year, and then the events in Q4 derailed us. So obviously working through that has been a big part of setting guidance for 2022. But in answer to the question, look, I'm acutely aware of the need to provide guidance that is trustworthy and realistic, and that's what we've tried to do.
Okay, and can you provide quarterly production numbers given the non-linear nature of the guidance? I can handle this, or Dan can overlay. I mean, we don't put out quarterly guidance numbers. We do at each of our quarter results highlight obviously the performance, but a view ahead. So I don't think we really give a view in terms of quarterly numbers, other than to say that in our release on the Q4 and guidance outlook for 2022, we forecast Q1 to be a lower quarter versus the forecast 3, and due to the issues that we've highlighted. I'm not sure what Danny did.
No, I'd just say, I mean, obviously I wish it was different. You don't want all your gold in Q4 because you'd like some flexibility to build around that. But, ultimately the mine plan is what it is. The gold is where it is, and you access it when you can access it. So, whilst we don't give quarterly guidance, I think Monty's highlighted the key point, which is through the year, Q1 will be weaker, and then we'll look to build on that.
Several questions on the sort of underground potential. When can we expect an underground study at Yanfolila to be released, and how will you be able to deliver a sub-1,000 AISC profile for any future underground production at Yanfolila? Maybe Anthony, you can dealing with the analysis, internal analysis, just a bit of a brief update, I suppose, what we're doing there and why the AISC's in that level.
So we've conducted the PFS study. We're now currently running some additional scenarios and looking at owner mining options, and also availability and scheduling options and payment options for bringing equipment in. The sub-level spacing is 20 metres in the mine, and we are looking to see how we can accelerate bringing ounces forward. Currently, in the mine plan that we have, it's around about month 5 or 6 we start to get first ore production. The decline accesses through the KE open pit, so we save significantly development metres by coming down the existing ramp. We have a portal location there already, and the mark out is there. The geotechnical work is already completed, so we're now updating that study, as I said, for owner mining. The drilling that was conducted in 2021 is also being reviewed in terms of, is there any upgrade potential into the reserves for the underground? We are quietly confident that the 202,000 ounces currently can be increased, and that will be part of the announcement in Q2. In terms of the AISC, the AISC obviously looks at a steady state production, and the costing. So the current numbers that we have from the PFS are sub $1,000 for the ASIC.
We're getting several questions about the plant. There's the plant shutdown in Q1. Can you provide a bit more colour about the plant shutdown that you announced? Maybe Anthony, you should give a couple of points about that and what's going to be done about the mill bearing and stuff.
Yeah, as part of our monitoring regimes, and we have external OEMs who we have online monitoring with, there was always planned to change the bearing. And this bearing is scheduled as part of our planned profile, and it will happen towards the end of Q1. We are currently just in the process of finalising the travel dates for this. And so it's no surprise the bearing, the replacement bearings are on site, are located, and I've physically seen them myself, so all is in train for a smooth and well-planned shutdown.
I'm just cognizant to get to other points of the business from the questions. We did have just one question about how long will Anthony be on site when you're there? Do you expect to stay there a bit more longer term, and what are your plans in terms of movements given the 3 assets?
Yeah, I will be on. I've been on site basically since the 2nd of January. I will be on site until the first week in March. I will head out for probably 10 days, and then I will be back to site. And what I see is that there's significant work streams here, and I will be spending the vast majority of my time for the first half of the year on site. We'll assess that as we go through the year. Also, I have the capacity here to access Carusa, and it's really a day trip from where I am. So I will be heading to Carusa from Yanfolila to spend some time on the ground there.
We've got several questions on Carusa. I think I was sort of done in the presentation, but what are the key milestones we should expect over the next 3 to 6 months? Well, Anthony, I can overlay that to you, and then I can overlay with sort of expectations in terms of releases.
Yeah, I think some of the key milestones will be the awarding of the mining contract, and then the starting of the mobilisation thereof. Also, the awarding of the power generation contract, breaking of ground and civil work commencing and starting the civil constructions, pouring of foundations and the like. Earthworks on the tailing storage facility, and so currently all is on track. Project management, those who are au fait, S-curves, we're slightly in front of our S-curve of where we should be. So all is looking well for the first gold pour Q2 2023. And
just sort of several questions about release expectations. I would just highlight that, obviously we had that video about this corporate presentation. In terms of releases, we still have further essays coming in from Carusa. So you should expect, and from the 2021 drilling campaign, which are coming in. So our geology team are busy analysing those, and when they come in, we'll look to issue those. So you should expect at least one more on Carusa, which will highlight the drilling we've done, but also in there we'll obviously update the market about construction process and looking to do sort of more multimedia updates with the time-lapse camera, which I believe is being installed currently or this weekend. A good question, specific question really, why was a dewatering team brought in on site so early? Maybe Anthony, in terms of thoughts on that?
Yeah, as part of the technical studies for Carusa, one of those technical studies is the hydrology, and the advice and the recommendation by the hydrologist was to start during this time, to mobilise, start and infrastructure in. So we are simply following that timeline and those recommendations. Okay.
Got a few questions about the grade at Carusa being very high. Given the grade profile at Carusa, do you see underground mining potential? I would maybe, Anthony, do you want to answer that? I mean, we haven't detailed thoughts about underground mining potential, but just some color about the geology and the pits there.
So maybe, Monty, I can just maybe take this opportunity. We have incorporated a group underground manager within our technical team, and we are looking at multiple opportunities for underground across the assets. So Carusa is one of those. The ore body is open at depth. Once we complete the feasibility study and the optimal pit shell, we will then start looking at scoping studies and the like for what it would look like for potential and then further potential drilling. We are currently doing some desktop reviews of the current pit shapes and what some of those optionalities would look like. So the answer is, I believe that there's opportunity. We now just need to have a clear study path of how we're going to take the existing information and move forward with it.
Okay, some questions on Dugby. Is there any update you can provide us on the DFS? I mean, I can provide that. I think it's pretty clear in the presentation and our literature releases that they're well on, Pasofino are well on target to deliver a DFS by Q2 this year. So you should expect more news flow at that time frame. Next question on Dugby I'm seeing here is once Dugby DFS is complete, we put 51% share for Pasofino. What will our percentage holding in Pasofino be pre and post Liberia government carried interest? Be Tom, for you.
Look, I'd just like to actually say I'm very excited about Dugby's DFS because my first day at Hummingbird, I got on the plane and flew to Liberia, and that was when there was no resource at all at Dugby, and now we're on the cusp of having a DFS, which is going to show fantastic economics based on the PEA out earlier. It's a very simple question. Once the DFS has been completed and the earning conditions have been met, both parties have the right to combine the asset into Pasofino. Our share would be 51% of Pasofino. The government's 10% carried interest in the equity of the project will be at the project level. That means that any money invested through loans would be not subject to the government's carried interest.
Okay. Another one on Dugby is how's the company planning to develop Dugby once the DFS is completed? I think, Dan, you made some comments about that in the presentation, but anything further to add?
Well, I think the point is that there is no defined plan, but we're open to discussing with Pasofino all options. I think, that if you see the placement Pasofino did, they recently raised some equity to finish the feasibility study, and they raised that money from a large agglomerate in Turkey, construction group with mining skills called ESAM. I know there are other potential strategic partners interested. I think that if you have an asset that has real value like Liberia, I think the development options, it will be a case of us choosing what is best for Hummingbird.
Understood. Moving to several questions here, just going through them, trying to segment them a bit in terms of some financial questions. What is the likely impact of the underperformance at Yanfolila on funding for development at Carusa and Dugby, and noting there's a sort of 15 million of net of internal cash flows required for Carusa build? Maybe Dan, you can give a quick.
Well, I mean, if you look at our ASIC guidance and forecast guidance for 2022, the models all show that we're funded to build Carusa. The development of Dugby is not in our cash flow plans for 2022. That needs some more thought. Obviously, there's both risk and opportunities to that. There's potentially opportunities with the underground to bring forward grade at Yanfolila. There's obviously inherent risk in the gold mining industry, the gold price not being least of those. But I mean, the key point to the question is, if Yanfolila delivers, the cash flows stack up and we are funded to build Carusa from internal resources. It's also probably worth pointing out that the construction program at Carusa is for the next 15 months till the end of Q2 next year. And the cash flow management of that is not linear. It builds up at different times. And there's quite a lot, I mean, from experience building Yanfalila, I think from memory, there was still $20 million of payables after we poured first gold from the construction. So there's quite a lot of flexibility in the cash flow management of these projects.
And also maybe to highlight, we have reduced our exploration spend this year to, well, twofold. One, to, I suppose, safeguard cash flows, but also because the geology team's playing catch up in terms of ability to process all the assays. But obviously, we per the release, we're going to review that in the second half. Another question we've got here is on financials. Can you provide a breakdown of the circa 20 million net debt number? Tom, I think.
No problem. Look, as disclosed in the announcement, our cash at 31st December was about $37 million. Against that, we had $61 million of debt in our balance sheet and $4 million of gold and inventory in doré and single mine origin gold grade.
There's another question here, a couple of questions on the working capital. Are there any other large working capital or tax/VAT movements investors should expect in 2022? Tom?
In terms of taxes, we are subject to a minimum turnover tax of 1% on corporation tax in Mali. That would be approximately $2 million this year. In terms of working capital movements, at the end of December, we did reduce working capital by about $10 million by taking the opportunity to get ahead on some creditors. I would expect, as we go build Kouroussa, that the creditor balance may increase. As Dan said, look, when we finished building Kouroussa, when we built Yanfalila, we had approximately $20 million cash left in the bank account when we bought gold. I would imagine that creditors will increase a little bit as we get towards the first gold pour. Okay. But we have not modelled any increase in creditors into our cash flow forecast for 2022.
Question just on the Chorus company financing package. Can you explain a bit more detail of the Chorus financing package of circa $100 million and having drawn down so far the two tranches of circa $66 million? And are there any covenant requirements in relation to the Chorus facility in general?
Chorus Bank International have been a fantastic partner to work with over the years. We have a very good relationship with them. We have a group facility of CFA 55 billion, which is approximately $100 million. We've drawn the first two tranches. The third tranche we're expected to draw in the first half of this year. There's a flexibility over that, and that will be provided as and when necessary. There's an 18-month repayment holiday on capital, and Chorus Bank have confirmed their continued support for us.
Okay. Going to several other sort of different questions. What investor marketing activity and for the next 6 months release program is looking like to improve the current share price? If I can handle that. Well, obviously we're doing this presentation today to highlight where the company's at, but in particular where the company is going with our growth platforms. We expect to have further releases, as I've detailed, in relation to our drilling campaign for 2021, because we're still finalising some of the assays, in particular from Kouroussa. So you should expect a drilling release for Kouroussa. We've also got data on Salamani East at Yanfalila, which the geology team are finalising their analysis on. And I think a big release, obviously, will be our updated company resources and reserves number in Q2, which we're excited about, given that we'll have all of the 68,000 circular metres of drilling in that. We will look to do regular updates for Kouroussa in terms of construction updates, as I've said, with more multimedia pictures and time-lapse camera to show progress on that front. Dan and myself are cognizant with COVID restrictions for travel lifted. We are looking to get out there for some more conferences. We're scheduled to go to Indaba. Our corporate broker, Canaccord, has a conference that they're doing as well. So we will look to get out in front of investors increasingly now for some conferences, and particularly to highlighting where we're at and where the growth platform goes. So I think for the next 6 months, we've got a busy year ahead, and I should expect a lot of releases coming out. There's a question on what does management and the board intend to do differently in 2022 to give the company the best opportunity to recover and grow its market cap and share price? Look, I think I've articulated what we're doing outside of just operational improvements at Yanfolila, and can keep delivering on our timeline for Carusa and showcasing what we're doing. I'm not sure, Dan, if you have any further to add.
Well, I think there's two sides to it. There's the marketing side to showcase the story that I think we probably haven't done enough of, and we're looking to, as Monty says, do more of that this year as the value proposition becomes clearer and clearer and Carusa comes on stream. I think Hummingbird has a very compelling story to tell, so we need to tell it. That's part one. Part two is obviously if you take out the extraneous circumstances that are beyond your control, it's about operating control, both at Yanfolila and the delivery at Carusa. And I mean, obviously we've invested significantly, and you can see from Anthony sitting at site almost full time, there's 100% commitment from the team to improve the operating area of the business to make sure we can deliver in a more reliable manner.
Okay. When does your company expect to announce the reserves number? I think we've updated that. As I said, it's going to be Q2 with further releases before that as announced. Getting several questions about directors and board planning to buy stock at these low prices. I can handle that. I mean, obviously we can't disclose pre-directors or board members buying stock. I will note that there was a release that went out this morning, and they will be articulated when they happen. Obviously the board and directors are cognizant about that, and also any updates about our major shareholders' holdings will be done via the TR1 announcements. I think we can't really sort of preempt questions about when the board is going to buy management given those reasons, but it's obviously well understood. In terms of confidence that the board and management can deliver guidance, there's a couple of questions on that. We have answered that in terms of what Dan articulated. Got a couple of questions on, can you explain the management incentive programs in a bit more detail? What are restricted stock units or RSUs, and how and when are they paid? Maybe Dan, Tom, any thoughts on that?
Yeah, sure. I mean, I think from my perspective, there's been some confusion on this because RSUs or restricted stock units are issued, but they only vest against performance criteria. And if those performance criteria are not met, they don't vest. So I think Hummingbird has, we've taken a lot of advice in this area on how to develop an incentive package that rewards and retains performance. If that performance isn't there, it doesn't pay out. And I think if you look at the payout rate of Hummingbird's bonus scheme over the last couple of years, it's been commensurate with the performance. I would say, though, that I think Hummingbird's incentive package is key to attracting and retaining key people and to motivating people to deliver the goals that we all want to see delivered and to align everybody with creating shareholder value. I don't know if you want to add any more detail, Tom.
No, I think an incentive package is not necessarily an incentive package. It's part of like a performance management package. People are accountable and they're projected, and people need to be remunerated appropriately.
But the key point is that I've seen people saying is, why are you issuing 1p shares? It's like sort of free giveaway. I mean, that's not the case. That's not the way these RSUs work, to clarify that.
No, and then we took significant advice and to make it so it's like a scheme which met all the criteria for SAP corporate governance, and there are demanding hurdles to meet for those RSUs to vest based on total shareholder return.
Okay, we've got sort of 5 minutes, a few more questions that are coming through. Are your operations back up and running 24/7 at Yanfolila? Maybe you can just give a bit of colour about that and what happened during the unrest period, but the ramp up in terms of that profile, Anthony.
Maybe you can turn your camera, show the mill turning, Anthony. I'm joking.
I can look out the window and I can actually see it turning from here. Yes, we are running 24/7. The operations run on 3 shifts, 3 8-hour shifts. From the unrest, we've moved back into full steady state operations. So there's no issues on that front.
Understood. There's a question here in terms of the contracts with we have at Carusa. Are any of those on a fixed priced basis, given the sort of inflationary pressures that we're seeing? Anthony, have you got any colour on that you wanted to provide in terms of the contracts, say for Wacom?
Yeah, a large proportion of the construction is on fixed price contracts, and obviously there is management hurdles within those. Inflationary pressures, we have a process. We are managing all of those elements that sit outside those fixed price contracts, and we are reviewing those and any potential impacts. However, we're also looking for opportunities where we can mitigate, reduce costs, and get things done faster. So we are working with our contractors on site. Our key contractor currently on site is Wacom. They have been very, very supportive of us, and they are very, if you like, dynamic and flexible, and they've already instigated some changes, some additional shifts. So we are looking for opportunities to further reduce and add some further mitigation against any of those inflationary pressures that we may see.
Understood. We've got several questions coming through to give a sort of a current update on terms of January production and cost numbers. No, we're not going to be able to do that. We will provide these updates at our quarterly releases with detail, as we have done historically. We will use our social media platforms to highlight sort of updates, but we will be putting the specific numbers on production and costs in our quarterly production numbers to be aware. I'm just cognizant of time. We're last few minutes going forward. I think we're sort of a lot of questions sort of potentially quite detailed, but I think we've gone through a lot of these already.
Fantastic. And Edward, you will have the ability to review those more detailed questions, and we can publish some responses where appropriate to do so if that'd be more beneficial. And as you say, we are just perhaps coming up to time, and you've covered off an awful lot of questions between you there. So thank you very much indeed. Just perhaps before we redirect investors to give you some feedback, Dan, I could just ask you for some closing comments, perhaps.
Well, I'd just say thank you, everyone, for your time. Thanks, Tom, Monty, and Anthony, for your time and taking those questions. I mean, to take a step back, I think where Hummingbird started, hacking around the jungle with no maps and no stream sediment samples, to where we are today, or on the verge of becoming a multi-mine producing company with over 7 million ounces of gold. It's been a remarkable journey. It's got an unbelievable platform for internal organic growth. On a cash per share basis, at the run rate we're anticipating next year, that you could be doing $180 million of cash. I mean, the value proposition is now extremely robust. I would just say the flip side to that is obviously we're doing something difficult. We're building and operating mines in a difficult jurisdiction with challenges from every angle. We've always been an honest company, and we've always been upfront about those risks and challenges, perhaps sometimes too honest, but that's our culture, and we'll continue to do that. And we are totally committed to building a gold company.
Fantastic. Thank you again. Thank you to the whole team for updating investors today. Can I please ask investors not to close the session, as you'll be automatically redirected for the opportunity to provide your feedback in order the team can better understand your views and expectations. This will only take a few moments to complete and is greatly valued by the company. On behalf of the management team of Hummingbird Resources, we'd like to thank you for attending today's presentation. That concludes today's session, and good morning to you all.